Salesforce is a global leader in cloud-based software and digital transformation services. In 2020, the company achieved record revenue and earnings despite the challenges posed by the pandemic. However, its growth also came with some trade-offs, such as higher capital costs and lower demand for consulting deals. Here is how Salesforce navigated the crisis and what it means for its future. Salesforce's main source of revenue is its subscription and support services, which include its flagship customer relationship management (CRM) platform and other cloud applications for sales, service, marketing, commerce, and more. These products enable businesses to connect with their customers and employees in new ways, especially during the lockdowns and social distancing measures. In 2020, Salesforce's subscription and support revenues grew by 29% year-over-year to $16 billion, accounting for 94% of its total revenue. Salesforce also offers professional services and other revenues, which include consulting, implementation, training, and integration services for its cloud products. These services help customers customize and optimize their use of Salesforce's software and achieve their digital transformation goals. However, these services are also more dependent on face-to-face interactions and project-based contracts, which were disrupted by the pandemic. In 2020, Salesforce's professional services and other revenues grew by 21% year-over-year to $1.1 billion, accounting for 6% of its total revenue. Salesforce's revenue growth was driven by several factors, such as its diversified product portfolio, its large and loyal customer base, its strategic acquisitions, its innovation and R&D investments, and its social and environmental initiatives. However, it also faced some headwinds, such as increased competition, regulatory uncertainties, currency fluctuations, and changing customer preferences. Moreover, Salesforce's growth also required significant capital expenditures to expand its infrastructure, data centers, network capacity, and security systems. In 2020, Salesforce's capital expenditures increased by 49% year-over-year to $1.4 billion, representing 8% of its total revenue. Another trade-off that Salesforce faced was the impact of its cloud growth on its consulting business. As more customers adopted Salesforce's cloud products, they also reduced their reliance on Salesforce's consulting services. This was because Salesforce's cloud products are designed to be easy to use, configure, and integrate with other systems, reducing the need for external consultants. Additionally, some customers prefer to work with third-party partners or internal teams for their consulting needs, rather than with Salesforce directly. As a result, Salesforce's consulting revenues declined by 9% year-over-year in the fourth quarter of 2020, while its cloud revenues increased by 35%. Despite these challenges, Salesforce remained optimistic about its future prospects. The company raised its revenue guidance for fiscal year 2021 to $21 billion to $21.1 billion, up from $20.8 billion to $20.9 billion previously. The company also expected to improve its operating margin by 125 basis points year-over-year in fiscal year 2021, reflecting its efforts to optimize its cost structure and enhance its profitability. Furthermore, Salesforce continued to invest in new products, markets, technologies, and partnerships to expand its offerings and reach new customers. In conclusion, Salesforce's cloud-based software and digital transformation services boosted its revenue and earnings in 2020, but also raised its capital costs and lowered its demand for consulting deals. The company balanced these trade-offs by diversifying its product portfolio, strengthening its customer relationships, acquiring strategic assets, innovating its solutions, and improving its efficiency. By doing so, Salesforce aimed to maintain its leadership position in the cloud market and deliver value to its stakeholders.